Hi, everyone. Thanks for joining our webinar. We are live now. I'll wait just a minute for people to get in and get settled, and then we'll kick off. Cool. Okay, I think people are in. People are in okay. Nothing's come up in comments for anyone not being able to hear us or see anything, so I think we're all good to go, Ellie. You're going to click over to the next one and we will introduce ourselves. So, yeah, well, I'm Aidan. I'm Chief of Staff here at Penfold. I look after a few things at Penfold, but one of the things I'm focused on at the moment is our distribution channel via accountants. Ellie, do you want to introduce yourself quickly?
Hey everybody, so I'm Ellie Lister, so I'm account management lead at Penfold. So my job is just looking after the account managers and all of our accounts and making sure that we're offering an amazing service for our direct clients and also all of our accountants.
Great. So the reason we have organised this webinar today is to try and talk you through three things. And we hope that kind of across the next 20 minutes or so that we answer these points and give you opportunities to ask us plenty of questions about them. So the first thing is we want to tell you about sort of the key changes for yourselves as employers or accountants who are working on behalf of employers of all the sort of policy changes that have come out of the recent autumn statement. We want to share some research and some survey insights that we've done recently that talk a little bit about how employees feel about their benefits and how employers have been providing their benefits to employees and what we can learn from that. And lastly, we want to talk a little bit about ourselves and how we can help on policy changes that might be affecting you. And if any of the things we have talked about in the second part about employees and employers' benefits and the relationship between them, how we might be able to help you guys with those points. So that's the aim agenda for the session today. I think we've got about sort of 20 minutes or so worth of content, and there's opportunities to leave comments or questions in the chat, but so please keep them coming through as we're going. But yeah, over to you, Ellie, to start us on number one.
Amazing. Okay, so on the meaty stuff, so insights from the autumn statement. So there weren't amazingly big changes in the policy changes for SMEs, but there were kind of three key topics there were changes that impacted SMEs. So firstly, around business rate and relief, then about the living wage changes and the changes in national insurance contributions for employees. And we'll dig into a bit of the changes for employers there and how you can make the most of changes there with things like salary sacrifice. And then lastly, this sort of really exciting sort of sentiment around the pension pot for life, which we're really excited about, which essentially puts more of a focus on the actual end user and offering a really engaging kind of experience for them that's a shift in change within the sort of pensions industry. So starting off with business rate and relief. So business rate relief has actually been extended for the next financial year. So if your business is a shop or cinema, or if you're in the leisure industry, then the rate relief has actually been extended for 2024 to 25. So this was set to sort of be axed in this statement, but it's been extended for the next financial year. So if you want to check if you're eligible for this rate relief, then you can just contact your local council to see if you're eligible for it. Secondly, full capital expensing is being made permanent. So this is a really good way for SMEs to kind of reduce their sort of tax. So for any expenditure that your business has in IT, machinery or equipment, you can actually offset this against your business costs and reduce your corporation tax bill. So it's a really just handy way of you claiming back sort of the corporation tax on any expenditure in your business. So for every £1 that you spend in this sort of area, you can claim 25 pence of this back. And you can do this in your self-assessment tax return in April. So again, another kind of good way about getting tax relief and making the most of the opportunities off the back of that. And then for wages and national insurance changes, so the national hourly living wage has risen to £11.44 per hour. And previously this was for 23-year-olds and above, but this has now since been changed to 21-year-olds. So I guess the sort of change there is just making sure that you're complying with that living wage change, and also making sure that those 21-year-olds are also, hitting that £11.44. On national insurance contributions, so the actual national insurance tax for employees was cut from 12% to 10%. However, for employers, it's actually stayed the same. So yourself as an employer will continue to pay the same rate of national insurance beforehand. Now, these sort of changes has been really beneficial for employees, like obviously increasing their living wage and cutting their tax. So there's not too much change on the employer side, but this kind of shows that's a really good opportunity for you to offer things such as salary sacrifice that can actually reduce how much national insurance tax that you pay on your employee's pension, on your employee salary. So I'll speak a little bit about salary sacrifice as a bit of a hidden gem that's not really spoken about all that much. Essentially, salary sacrifice is a government-backed scheme that helps both employers and employees save on their national insurance tax by the employee actually swapping a part of their salary for another benefit. So, for example, a pension. So, for example, an employee, what they'll do is say they were earning £50,000 each year. If they reduce their actual overall salary to 47,500, let's say, for example, that £2,500 they'd put directly into their pension. And so they've essentially reduced their on-paper salary. And because their salary on paper is smaller, they therefore pay less national insurance tax. But this is also the same for not only for the employee, but also for yourself as an employer. Because national insurance tax for a company is calculated on the gross salary, but again, by the employee's sort of salary being reduced on paper, it means you owe less in national insurance contributions. So you can see on the right-hand side in this diagram that your before salary sacrifice, the employer national insurance that's owed is on the entire salary, whereas in this instance where they've reduced their salary and that's gone directly into their pension, so it's actually shaved their overall salary, you're paying less amount of national insurance. It's a really good hidden gem. It's a bit of a no-brainer because it helps both employees and employers through to make the most of cutting down on their overall tax. So what does this actually look like for a company of your size? So here's just some ballpark figures of if your company had 50 employees and they all had an average salary of £50,000, you could make roughly around £16,500 annual national insurance savings, which is pretty big for a free kind of offering that the government has backed. And if you have any questions about what kind of savings you guys could make as a company, based on the sort of average salary of your company or average size, then please just reach out to me afterwards and we can run through these. But yeah, salary sacrifice is completely free to implement. So Penfold does it completely free for you guys. And we can also, it's a bit of a, there's not too much educational content around there for employees to kind of explain all the benefits. So we also offer going through salary sacrifice with employees, can run through sort of the considerations and the benefits of opting in, and how much they can overall save by putting their pension contributions via salary sacrifice. So that was a bit of a detour, but I'll get back to sort of the insights from the autumn statement. And this is a really exciting sort of change in the industry sort of thought, is this pension pot for life. So this pension pot for life essentially means that employees get to choose a pension provider that they want to stay with them throughout their entire career, rather than the sort of employer selecting a pension provider for them. And the benefits of this is that it means that the employee doesn't have several different pension pots scattered around. That's usually quite hard to track down when they actually come to retire. But what this means is that employees will then get to choose the pension provider that they like the most, and base this on the value that that pension provider brings them, whether that engages them in their sort of finances, gets them on track to reach their sort of retirement goals. It's down to the actual employee. And this might sound like a bit of an operational headache for heads of HR or payroll, where you might have to be, running payroll to lots of different pension providers all at one time. But the kind of benefit or the importance of this is that it's really marking a shift in how pension providers and employers are essentially prioritizing the employee and their experience, and therefore wanting to offer a pension that really gets them on track to hit their goals and really engage them in pensions and financial well-being in general. So it kind of shows how, pensions aren't just, meeting your auto enrollment duties, and rather you want to offer a better pension that engages employees. And by offering a better pension, it means you might just get ahead of the curve, where you're offering a provider that can really help employees, and therefore not having to switch later down the line when all your employees want to go towards a pension provider that offers better benefits. And that kind of sets the tone for this sort of webinar about employee experience and about, Penfold's mission, which I'll dig into a bit in a second, which is all about how employees value their workplace pension. So we kind of ran a lot of surveys around how employees view their pension and benefits in general, and we kind of wanted to understand if there was a disparity between what employers thought were the most important benefits to employees and then what employees actually thought themselves. And so we surveyed 2,000 UK workers, 500 SMEs, to understand how they felt about their benefits. And we also wanted to know what the most important benefits were that employees considered when they were thinking about leaving a job or staying in a job. And we also wanted to understand how different sort of industries, what their benefits package looked like, and how that differed, and how that had an impact on retention and attraction as well. And we also wanted to understand how the cost of living crisis was also having an impact on all these things, and how much employees valued financial well-being, and whether they felt that their employers were basically doing enough to support them during the tough times. And so what we found was that, kind of understandably, a lot of employees, their financial well-being had been impacted by the cost of living crisis, but a stark majority believed that they kind of had this expectation that their employer wasn't doing enough to support them during this tough time. So they felt as though 84% of employees felt their employers weren't supporting them enough with their financial well-being during the cost of living crisis. And sort of support on financial well-being, what that tangibly looked like was offering educational content, or partnering with like a benefit sort of partner that could come in and speak about finances, speak about short, long-term sort of saving strategies, and sort of how to take advantage of things like tax efficiencies. So that just shows that there's like a growing importance from the employees are placing on their employers to provide for them within this financial well-being space. And we also found that the biggest sort of benefit that employees consulted when they were thinking about switching jobs or staying in their job was in fact their pension. So 90% of employees said that their workplace pension influenced their decision to remain in their job, whereas employers thought that things like gym membership were more important, like work socials were more important than actual a pension. And so what does this really show? So it kind of just shows that there's like a growing awareness that, are you supporting your employees enough with their financial well-being at the time? Are you offering a good enough workplace pension that could actually have an impact on employees staying at your workplace? And then also, are you offering a pension that could potentially even help on your financial well-being, and how to boost that with employees? There's lots of providers out there that can actually support, and educate employees on how to get on track with not only their retirement, but also take like a holistic view of their finances. So could you get a pension provider that's doing more for you? And could you actually do more with your benefits package to make sure that you're kind of turning it into a good tool for retention and talent attraction? And so during our kind of research, we looked into what employers were doing across the board to help boost their benefits package and sort of turn it into a talent attraction and retention scheme. And these are just some really easy, free easy sort of ways to get the most out of your pension offering, and then in turn, hopefully boost financial well-being and also retention. So initially, as I've spoken a lot about it, but it's just, are you offering an engaging pension? Does your pension provider, is it really flexible for employees? Is it easily accessible? Can employees log in whenever they want, change their contributions, and get complete understanding of what their pension looks like today, but what it will look like in the future? And we found that this was a really important part of employees actually feeling more in control of their financial well-being by actually having the numbers to hand. Does your provider offer good calculator tools, again, to project the value of their pension in the future and get them on track? And importantly, does your provider offer good customer service? In the kind of growing world of fintech, there's more of an importance where employees and the end user really want to get access to an actual human, so an account manager on the phone or online on the chat box. So it's really important that, you know, they're getting access to that sort of level of service. Again, you could offer salary sacrifice. As I mentioned before, this does save, you know, national insurance tax for you as an employer, but that can similarly save national insurance tax for employees. So this is completely free to implement, and it's definitely something you should have a look into doing so, because it's just a free, easy way to help support your staff during tougher times. Financial content. So are you sharing enough financial content and educational resources with your staff? So this could be kind of breaking down how to save long-term and like short-term saving strategies. That could be via, like, you might have like a HR team that sort that out, or culture team. But then also you could always partner with a benefits provider that wants to come in and engage your staff and sort of educate them and provide that content they need to make really informed decisions about their finances. And then lastly, which isn't a free initiative, but is something to consider, is, are you offering a good sort of pension or a competitive pension contribution to your employees? So the auto enrollment minimum is 8% with 3% from the employer. But we found that employers that had more competitive contribution offering, therefore, you know, would retain staff, or they would at least consider their benefits package a little bit more seriously. So you could offer something like one-to-one match contributions. So as your employee increases their contributions to a threshold, you'll also similarly match it. And that just also increases the employee for increasing their overall contribution amount and just encouraging them getting on track for a comfortable retirement. And you could also explore other sort of contribution setups, like offering total earnings. So this is whereby you pay a pension contribution on the employee's total amount of earnings. So that's the entire pay, but any overtime and salary. That's obviously more expensive for you as an employer, but it's also something, if you've got staff that work a lot on overtime, or they're in sales, so a lot of the money they make is based on their bonuses, and this could be a good thing to consider switching your sort of contribution setup. And that's everything about sort of benefit and financial wellbeing side. And now we're going to switch over a bit to speak about how Penfold can help you, and sort of starting with and why we exist today. So I'll switch over.
Awesome. Thanks very much, Ellie, and fantastic content, well shared. So look, a quick few minutes on who we are and who Penfold is. So Penfold was founded in 2019 by the three co-founders pictured there, Pete, Stu, and Chris. They had experience as employees, as business owners, as members of finance teams, and previously in sort of life as auditors and accountants, the pain that happens with managing their pensions, and actually what the typical employer and employee experience is like with pensions. And Ellie touched on kind of a lot of the sort of worst cases in her previous section. We launched in 2019, focused on the individual saver. We wanted to build a pension experience that could really deliver to the end customer, the person who is making savings into their pension and will be using it in retirement. We wanted to make sure that we could actually help them understand what's going on with their pension and start to make meaningful changes to the way they were behaving with their pension, whether they were consolidating old pots, whether they were making savings plans, regularly contributing, things like that. A couple of years later, we launched into the workplace pension side of things. So we started to be able to provide pensions for employers to offer to their staff. The reason we sort of did that secondly was, we felt like we had built something that really did deliver to the end saver. We'd reached 10,000 customers by 2021, and now it was time to take that to an even broader audience and help the employers who have problems with pensions as well. In 2022, we reached 100 million assets under administration, which is all those people who are in our pension scheme saving and consolidating stuff. There's clearly something about the Penfold experience that got them engaging with their pension saving. So that's fantastic to see. And today we are working with, I think it's over 1,000 workplaces now, and we have 50,000 people who are sort of regularly saving, either directly from their own pocket or with their in a workplace pension scheme. So yeah, it's been a pretty exciting ride for the last 4 years. And our mission, Ellie touched on it, is really to help everyone save enough for retirement. Only sort of 20% of people are on track for a comfortable retirement in the UK. And we think that's a problem that's ultimately explained by pensions not being accessible and engaging. So we're using technology to solve problems around how easy it is to understand what's going on with your pension. How many times have you been able to log into Nest and see what the latest value of your pension pot is, as an example? We think that's a sort of technology problem to solve, and we've built a fantastic end customer app that provides that kind of visibility, as well as the kind of calculator and retirement planning tools that people need to kind of get their heads around how much they've got and what that might mean for them in the future, and how much they might need to save to start saving for a comfortable retirement. But also something for employers and the accountants that often work really closely with employers to administer the pension on behalf of workplaces. So I guess our offering is really to end savers and to businesses, and they're both underpinned by the kind of modern tech approach that we've taken. For end savers, we've built something that people actually love. We have lots and lots of customers who kind of think of us as, the Monzo for pensions, and we're a sort of go-to app alongside anything else that they might have on their phone, which is fantastic. And we're giving them all the support they need to start saving towards a comfortable retirement, be that the kind of flexible planning tools on the app. It will be sort of educational content we provide on our site and with our emails, or with our customer support team if anyone has any need for further support. For businesses, it's this the modern tech platform that you saw the picture of on the other slide, the ability to manage pensions in a sort of seamless and frictionless way. And because we've built such a great sort of tech platform, we don't have to do a lot of operations in the background. It means that our people, like Ellie and her team, and our customer support team as well, can be proactive to offer things to help businesses make more of our workplace pension. And for our operations team, our customer support team, they can be even quicker if there's something that clients or customers need, should the need arise. So that's the Penfold offering distilled down there. Something extra this festive time of year, sort of a Christmas extravaganza, is an extra incentive for employers to offer in the run up to Christmas. If people on this call are interested in hearing more about Penfold, we'd love to talk to you more about it. But an extra reason to kind of talk to us and talk about switching your pension provider to Penfold this month is we've partnered with Octopus Money, who are a really brilliant progressive financial wellbeing brand that offer all these things on the right hand side. And we are able to extend to anyone who signs with us this month. So that's getting a free starter session with a dedicated financial coach. Ellie and I have both done those, and they're absolutely fantastic. A really brilliant hour-long detailed conversation, which is absolutely brilliant. Support with mortgage advice, access to monthly webinars, and their financial education hub, which has got tons of brilliant resources in it. And also this suite of sort of personalized content that help people really understand what's going on with their personal finances and be able to start making positive changes that they can identify through those resources or with that conversation with the financial coach. So yeah, a really exciting kind of near-term incentive there for anyone who is thinking about actioning any of the points that Ellie mentioned previously around helping with employees' financial well-being, as well as getting an awesome new pension provider in the run-up to Christmas. So that's everything that we wanted to go through. I've put my Calendly link on here in case anyone wants to book 30 minutes to talk about switching their scheme. And I'm sure, Ellie, you could share yours in the chat somewhere, or you'll easily be able to find us on LinkedIn, in Curran and Ellie Lister. If there's any questions that people have, please feel free to drop them into the chat. Otherwise, we will make this recording available for anyone who wants to have a look at it. Cool, Ellie, I've actually got one question here, which I'll read out for you. So I think it's kind of talking about the account management function, which is why I've kind of thrown it to you. And it's about the sort of role of the account management team with switching, and picking up on this point of like making that switch happen before Christmas sounds like quite stressful. What's the kind of typical approach for you guys as the account management team to move a employer from an old pension provider to Penfold potentially?
Yeah, really good question. It feels like a bit of a headache, and that it's quite a long-winded sort of process. I guess it's not, or at least with Penfold, we make it pretty simple to do so. For us, we just kind of need the details of your company and like just more of like the logistics of your company number. And then on our side, our account management team does take a lot of it. So we'll initially have that handover call with yourselves to run through just some key timelines. So when you want to go live with employees, we send lots of sort of engaging content to employees to let them know they're switching over to Penfold, and share lots of like FAQ articles so they know everything that happens as actual part of the handover. And we also offer a welcome session. So we'll actually have an online session with your members to walk them through things like salary sacrifice, their contribution setup, and things like that. So that initial sort of handover session is to set timelines for when we want to go live, and also get the sort of information from you and the go ahead of what your contribution setup looks like. And we can also consult you on that if you want to offer salary sacrifice or offer a different sort of contribution setup, and we can. And then it's kind of down to us on our side. We do a lot of the back end setup of your scheme. We provide access to the platform, and we will run you through that in a demo. And we'll obviously work with your payroll team or your payroll provider to start getting the actual contribution files to upload and get the first sort of pay period up and running. So it's all kind of on our side. We just have that first initial handover to set those timelines and get the information we need.
Awesome. That's amazing. I'm conscious of the time. We've used the full 30 minutes. So I think we'll wrap it up there. Thanks, Ellie. Thanks, everybody, for joining me.
Thanks, Aidan. Thanks, guys. See you later.